Welcome, dear friends and investors, as we come to yet another communication on markets and investing. This month, we will primarily take stock of two things. One, how the Q1 earnings season is progressing thus far, and two, which is obviously the most hottest topic right now and an area of concern for everybody, which is the US-India trade deal and the new tariffs that have been imposed by US on India. So let's first tackle how the earnings are progressing. We are roughly midway into the earnings season, where 285 out of the top 500 companies have already declared their results. And thus far, the 285 companies on aggregate, the profit after tax has grown by about approximately 9%. If you look at the Q4, which is the quarter just before the Q1 quarter, which is the last quarter of the last financial year, the growth for the top 500 companies was merely 5%. And therefore, in that context, the numbers in Q1 seem to be significantly better. And why do I say that? Because seasonally, usually Q1 is a much slower quarter, and Q4 is actually supposed to be a very strong quarter. Now, from the top 500 companies, if we come to the much more narrower Nifty, then roughly about 38 out of the 50 Nifty companies have declared their results, and the PAT growth is at about 10%, and a similar number for last year was just 3%. So again, if you compare it to the whole of last year and look at Q1 today, I think the Nifty earnings also seem to be doing better than what we've seen in last year. However, what is interesting is that when you look at the midcaps, which is the midcap 150 index, and 80 out of the 150 companies have declared their results, the growth in profitability is a very healthy 20%. And if you look at the small caps, out of the 250 small companies, roughly 139 companies have declared their results, and the growth is just about 4.5%. Now, this trend is very similar to what we saw last year. The top 50 companies virtually didn't grow, 3% growth. The Nifty 500 companies showed a 5% growth. However, mid-cap showed a 19% growth, and small caps showed a 6% growth. So clearly, what was happening in India last year was that the top 50 companies weren't growing, but the mid-caps showed a very healthy growth, and the small caps in aggregate, again, just showed single-digit growth. And that trend continues into the first quarter of this year, and mid caps continue to outperform both large caps as well as small caps. And as I said, while these are roughly trends where roughly 50 to 60% of the companies across the universe have declared results, we will certainly come back to you next month when the full picture is in front of us. Dear friends, now let's come to the elephant in the room, and that is the tariffs. As you all know, that President Trump had announced a series of tariffs on several countries in April, which was called as the Liberation Day. And if you look at where India stood at that point in time, India had a tariff rate of 26%, And at that time, when we compared ourselves to several other neighboring or Asian economies that typically tend to compete with India on exports, India was relatively very well placed with tariffs on many other countries like Taiwan was 32%, Indonesia at 32, China at 34, Thailand at 36, Bangladesh at 37, Vietnam at 46. So a lot of the other exporting Asian economies had tariff rates which were much higher on Liberation Day as compared to where India was. However, since then, a couple of countries have managed to sign trade deals with the US. And while India was one of the earliest countries to have started negotiation on a bilateral trade agreement with the United States, there are clearly some disagreements, and India has not yet been able to sign a definitive agreement or arrive at even an interim trade agreement with the United States. And as a result, President Trump decided to levy a 25% tariff on Indian imports into the US. And this time, if you look at the pecking order, relatively, as per the latest tariffs across countries, India isn't as favorably placed as it was when tariffs were first announced during Liberation Day in April. For example, in the case of Vietnam, where earlier the tariffs were very high at 46%, they are now down to 20%. While China theoretically has a higher tariff at 34%, but there is a 90-day reprieve that President Trump has given to China, so we do not know finally where tariffs in China will land. But as things stand today, clearly, I think India expected a far better tariff rate, considering that it did not have a very confrontationist attitude with the US, or nor did we resort to reciprocal tariffs like some of the other allies and countries did. Having said that, it does look like that we will be in for some tough negotiations, and while things may not seem to be hunky-dory between India and the US, we do hope that over the next few weeks and months, we should be able to hammer out a deal which is a win-win for both countries. But until then, if we were to look at what is at stake, you will see that India's exports to the US in calendar year 2024 was approximately about $90 billion. And some of the large sectors which have exports to the US, the largest is pharmaceuticals at 12 billion, apparels and textiles is at little over 10 billion, telecom parts, which obviously includes smartphones. So as you all know, Apple is a big exporter of smartphones that are manufactured in India and is sold into the US. That's roughly at about 8 billion. And then precious stones, gems and jewelry was also at about 8 billion. However, as we know, currently pharma as well as some electronic items including smartphones are excluded from any tariffs. So thus far there are no tariffs on at least two large areas of exports that go into the US. So while pharma and some electronic equipments like smartphones are excluded from tariffs, some of the other sectors, especially apparels and textiles, precious stones, that is gems and jewelry, chemicals, and auto parts continue to face tariffs for exports into the US. Having said that, if we look at the net incremental impact of how much additional tariffs would be levied on exports from India into the US, this is how the numbers stack up. Pre-Liberation Day, the total tariffs paid by all of India's goods exports was 2.3 billion. On 10th April, that is after Liberation Day, when tariffs, a 10% baseline tariffs on all exports was announced, that number increased by another 7 billion. So you had 2 billion and then you added 7 billion. Subsequently, there was a 25% tariff put on steel that added another 0.8 billion. And now, in the recent round of where the tariffs have gone beyond the baseline 10% tariff to now 25% tariffs, there is an additional hit of 10 billion. So all in all, between Liberation Day and as things stand today, there is an additional tariff of $18 billion that will be levied on all of Indian exports to the US. However, when you look at it in the context of how big this is as a percentage of our GDP, I think there is something that we need to keep a perspective in mind, is that India continues to be predominantly a domestic demand-driven economy. And that is really the strength of India in the current trade and geopolitical conflict and situation that we are in. India's total exports in calendar year 24 were 450 billion on a total GDP of roughly about 4 trillion or 3.9 trillion to be precise. Hence, exports to GDP was only 11.5%. And of the total exports, exports to the US was only $90 billion or constituting 2.3% of India's GDP. And on this $90 billion, if you take an additional $18 billion of tariff hit because of the 25% tariff rate that has been currently levied, that amounts to a mere 0.5% of GDP. Hence, investors and friends, while we do want a good relations with many of our trading partners and especially an economic power like the US, I think from a pure numbers and economic standpoint, the incremental impact of tariffs on India's GDP is not something which is very significant. And that's also precisely why there is a palpable nervousness both within the industry and the capital markets. We believe that India should be able to weather the storm, and we hope that both the United States and India hammer out a deal, keeping the long-term strategic partnership in mind. And I believe that while the economic consequences may not be very significant, I think the sooner we are able to arrive at some kind of a trade agreement, it would significantly lift the spirits. It would bring visibility to businessmen to plan for the future and also take the cloud of this uncertainty away from the markets. We will watch how things unfold over the next few weeks, but there is cause to be cautiously optimistic and we hope that we have some good news over the next few weeks. Till then, thank you. Until the next time.